the first question on block. A very good question. That should be a very good question. Testing something a bit different. Testing something a bit different. So that should be April 2024. Open April 2024. Question 3. April 2024, question 3. April 2024, question 3. Question 3C. April 2024, question 3C. So we enjoy our class. April 2024, question. April 2024, question 3C. April 2024, question 3C. April 2024, question 3C. If you're there, we respond with a yes. Kama tuko hapo, tubonyeze yes. My target is basically to do 2 questions. So we make use of our time to do at least 2 questions on employment income. So that I go to business, we revise on partnership and limited. That is on the next class. But purposely today, at least 2 questions would do for us. Can you start that question? April. Perfect. So we're being told that John Musoka is employed as a finance manager, by Safari Real Estate. He reported the following details of his income and that of his wife for the year ended the 1st December 2023. So one, we're being told he was entitled to a basic salary of 400,000 per month, and you're told that the pay is 120 per month. Pay 120 per month was deducted. Pay 120 per month was deducted. So number 1, is basic salary taxable or not taxable income? Is basic salary taxable or not a taxable income? So that's taxable income. The bracket, the item that you have pay, that is basically what you call a tax credit. Pay is what you call a tax credit. So for that pay, we are going to less it when you're getting the tax, the net tax payable together. Pay is the tax credit. So we're going to less it when you're getting what you call the tax payable together. When we are getting the tax payable, we respond with a yes. So additional information number 2. It was entitled to an annual bonus. It was entitled to an annual bonus of shillings 120,000 during the year. Of shillings 120 during the year. The bonus for the year 2023 was paid until 2024. The bonus for the year 2023 was paid until 2024. How do you treat that bonus? And look at the word was paid until 2024. Was basically paid until 2024. Was basically paid until 2024. Was basically paid until 2024. How would you treat that? Was basically paid until 2024. How do you treat that? Is it a taxable income? And if it's a taxable income, when do I count it? Is it 2023 or 2024? Is it 2023 or 2024? We respond so that we flow with the question. Is that a taxable income? Number 1, bonus is a taxable income, and we are counting it is a taxable income in 2020, 2023. Are we together? It is a taxable income for 2023. We are counting for 2023, 2023. Look at the salaries for December. Salaries for December. For some organizations, they receive them in January, that is of the following year. But they're basically accrued in 2020, in 2023. So we account for it. That is the taxable income. So the next, we're being told that the employer provided him with a motor vehicle. that had a cost of 3.2 million, that had a cost of 3.2 million in the year 2021. The vehicle was valued at 2.5 at the beginning of the year 2023. So we are told that this motor vehicle, 2,600 cc, had a cost of 3.2 in the year 2021, and the vehicle was valued at 2.5 at the beginning of 2023. When you're getting motor vehicle benefit, that we agree is a motor vehicle benefit together. That is a motor vehicle benefit. Are we all in agreement? That is basically a motor vehicle benefit together. But again, the two aspects of the motor vehicle benefit, we are definitely comparing CC, and at the same time, we are comparing what? 2% times months times what's called the cost of MV. On this cost, look up, team. We don't use what? We don't use the net value, but we use original value. So what are we going to use as the cost? We are going to use the original value, which is 3.2. We are not going to use 2.5, 2.5 together. When you're getting motor vehicle benefit, we are going to use 3.2 because that is the original value. That is the original value. So perfect. So then we are being told on the next additional information that is annual mortgage repayment of 810,000 inclusive of interest was settled by the employer. The loan was obtained from Elite. The loan was obtained from Elite on 1st January 2023 to purchase on residential. So we have a mortgage. We have a mortgage. Look at this mortgage. The mortgage is a figure of 820. But out of this figure, the examiner tells us that we have a figure of 180. A figure of 180. This is what they call the interest. Interest on what we call on mortgage. We call it the interest on mortgage. We call it the interest on mortgage. So how much is the mortgage when you less that, apart from the interest? 820 minus 180, that should be a figure of 640. Is the figure 640? If the figure is 640, then we respond with a yes. If the figure is 640, then we respond with a yes. So look at two things, this mortgage, who paid the mortgage? Who paid the mortgage? Who paid the mortgage, Tim? We understand that this amount was paid by the employer. If this figure is basically paid by the employer, then definitely this becomes what's called a taxable. It becomes a taxable benefit. This becomes a taxable benefit. We call it mortgage repayment benefit, or we'll call it mortgage. We call it the mortgage repayment. We call it repayment benefit. We will call it the mortgage repayment benefit. Together, team, we will call it the mortgage repayment benefit. Together. So that becomes a taxable benefit. On the other hand, the figure of 180, which is interest, this becomes what? This becomes allowable. We call it allowable deduction. This becomes allowable deduction. I hope that is exhausted. That is perfectly exhausted. So we proceed to the next additional information. So being told, number 5, the following deductions were made from his salary during the year. So we made a subscription to Jenga Golf Club. Subscription to Jenga Golf Club. subscription to Jenga Golf Club. How do you treat subscription to Jenga Golf Club? How would you treat the subscription to Jenga Golf Club? How would you treat subscription to Jenga Golf Club? Subscription to Jenga Golf Club. Is it allowable deduction? Not allowed? No. Does it relate Jenga Golf Club? Does it relate to the work of finance manager? That is not an allowable deduction. Are we together? That is not allowable deduction. Together. So for the figure of 66, it is not a benefit. Why is it not a benefit? It was not paid by the employer. But on the other hand, if we check also that subscription to Jenga, we realize that this subscription to Jenga Golf Club does not basically relate to the work of the employee, who is John Musoka. Together. So that figure, we are not going to apply it neither as a taxable income or allowable deduction. Together. We respond to the yes if you're together. We respond with the yes. On the figure, the next deduction, we have deduction to a registered pension. Deduction, we call it deduction to a registered pension scheme. Deduction to what we call a registered pension scheme. Deduction to a registered pension scheme. How do you do that? That is allowable deduction. That is basically allowable deduction. So then you're being told that he received gross dividends. This gentleman called Musoka received what's called a gross dividends. What do you call a gross dividends? What do you call a gross dividends? What do you call the gross dividend of a figure of 80,000, of a figure of 80,000. A gross dividends of a figure of 80,000 from his shares in Safari Real Estate Limited, where withholding tax was paid by the employer. Where the withholding tax was paid by the employer. So if somebody receives his shares altogether, it's clear how it's together. Perfect. If somebody receives his shares, we say that if somebody receives is what we call received a gross dividends. A gross dividends of 80, a gross dividends from 80 from Safari, where the withholding tax was paid by the company. If the withholding tax, number one, dividends from a limited company, how do we classify dividends from a limited company? Dividends received from a limited company, those are qualifying dividends altogether. Number one, realize that they are called qualifying dividends. And whenever we talk about qualifying dividends, the 5% withholding tax is final. Once we deduct the 5% dividends, we do not subject them to further taxation. However, the example is very clear. It tells you a figure of the withholding tax. We can get that figure of withholding tax of 5% times 80. How much is this withholding tax? Remember, the withholding tax for dividends that are received from limited company is 5%. So what is the withholding tax? What is the figure for the withholding tax? The figure for the withholding tax? So that is a figure of 4K. But look up, team. This figure of 4K was basically paid by the company. So it's a benefit. Call it withholding tax. We call it withholding tax benefit because it was paid by the company. So this becomes a taxable benefit. Together, withholding tax benefit, it becomes what we call a taxable benefit. This becomes what we call a taxable benefit. Together, team, that becomes what we call a taxable benefit. That becomes what we call a taxable benefit. Is that noted? We are together if that is noted. If that is noted, we respond with a yes. Perfect. So then we proceed to additional information number 7. So being told that his wife, Janet Musoka, is employed by Bright Farmers Cooperative as a general manager with a basic salary of $160,000 per month. With the basic salary of $160,000 per month. So that salary, is it taxable? The wife's salary of 160,000, is it taxable? Is it taxable? The wife's salary, is it taxable? Is it taxable? Yes, it is taxable. Then on the next, we're being told that she is housed by cooperative firm. She is housed by cooperative society firm, where she contributes 5% of the basic salary, as rent. So what is that? That is housing benefit. Together, housing benefit. Tuko pamoja. That is an housing benefit. We respond with a yes if you're together. That is housing benefit. We respond with a yes. That is housing benefit. But look at this, team. That housing benefit, what does it relate to? It relates to agricultural. For employees who reside in agricultural, are we together? For employees that reside in a farm or plantation, what is the rate? We are going to use 10%. We are going to use 10%. 10%. Are we together? Because you're being told she's housed within the cooperative society farm. So we're going to say 10% of the employment income. Remember, when you are talking about the housing benefit, we say that for employees that reside in a farm or a plantation, we use 10%. Together, we use 10%. Together. Perfect if you're together. So then we're being told that she received a free farm produce of 24,000. She received a free farm produce for 24,000. What is that? She received a free farm produce of 24,000. How do you treat that? She received what's called a free farm produce of 24,000. She received a free farm produce of 24,000. How do we treat that? Of 24,000. How do you treat that? A free farm produce of 24,000. That is benefit in kind. Are we in agreement? That should be benefit in kind. That should basically be benefit in kind. That should basically be benefit in kind. Benefit in kind. Is it taxable? Is it taxable? Is it taxable? Is it taxable? Is that benefit in kind taxable? Is it taxable? No. Why? It is less than 36. It is not taxable because it is less than 36,000. Because it is less than 36,000. So the next we're being told that other income, that is for the wife, Janet Musoka, interest income, a 10-year infrastructure development bond of 120. How do you treat infrastructure bond? A 10-year infrastructure bond. How would you treat it? Is it tax? A 10 years, those who invest in that, those who invest in infrastructure, that's tax-free, exempted from tax. That is exempted from tax. Then we have the next, we call it interest from Wema Development Bank. If an individual receives interest from a bank, how do we call it? Is it qualifying or non-qualifying? If an individual receives interest from a bank, is it qualifying or non-qualifying? If an individual receives interest from a bank, is it qualifying or non-qualifying? Interest that received, that is qualifying. So if it's qualifying, we basically understand that the 15% withholding tax is final, and therefore we do not subject it to further taxation. Are we going to include it if it's qualifying? We are not going to include. We are not going to include it. Together, we are not going to include it. Then lastly, so we're being told lastly, gross farming income of 240, gross farming income of 240, excluding what you call family consumption, valued at 30. Is farming income subjected to further taxation? Is it income that is subject to further taxation? Is it income that is subject to further taxation? Is it income that is subject to further taxation? Yes, we do. Are we together? So we subject it. What do? Farming income. We say that it's an income. We subject, that's a taxable income. Farming income. The figure is 240, excluding. When they say excluding own consumption, how do you deal with own consumption that basically has been excluded? Own consumption that we understand has been excluded. You add back own consumption. Remember, whenever you have own consumption that is excluded, you add back. We say add back own consumption. Call it own consumption. Own consumption of 30,000. So the total that is subject to tax is 270. Give me a yes if you're together. The figure is 270. We respond with a yes. Perfect. So then the examiner tells us, John Musoka and the wife, Janet Musoka, have been filing separate tax return on Revenue Authority. I've been filing what we call separate tax return to the Revenue Authority. John Musoka and the wife, Janet Musoka, have been filing what we call separate tax return to the Revenue Authority, meaning we are going to tax them independently. Together, team, we are going to tax John and the wife, Janet Musoka, separately. We respond with a yes if you're together. We respond with a yes. Perfect. Then ignore the affordable housing levy. This one we still ignore. Are we together? We still ignore it. It has not been applied, however, because of the inconsistency. When you look at calculations of the housing levy, it has not been presently been tested a lot because of the inconsistent. People going to court, it's rejected, so it has not been applied in the exams. Maybe they would try and apply it this time. So we've been told that compute taxable income for John Musoka and the wife for the year ended 2023. So we come here and we get those. I want to start with John Musoka. We have John Musoka. So we have John Musoka. We just can't bring it here. John Musoka. Musoka. We call it taxable income. We call it for 2023. Taxable income for 2023. Taxable income for 2023. What we call the taxable income for 2023. So the first one is the basic salary. So we have a basic salary. Basic salary. That should be 400 times 12. Give me that. 400 times 12. So give me the figure 400 times 12. 400 times 12. What do we have? 400 times 12. So we have a figure of 4.8. 4.8. So the next taxable benefit is the bonus. We have bonus. So bonus was 120. Bonus was 120. So then number 3, we had what's called motor vehicle. We call it motor vehicle benefit. So that should be 2% times 12 times 3.2, because that's the initial cost. You compare with 2,600 cc. What is the figure for 2,000 motor vehicle? 2,600 cc from the tax table. What is the figure for that? What is the figure for that? What is the figure for that? The figure for that is so that should be 103,200. 103,200. So get for me 2% times 12 times 3.2. 2% times 12 times 3.2. 2% times 12% times 12 times 3.2 times 3.2. times 3.2. So we have 768. We have a figure of 768. So what is the higher? The higher is 768. The higher should be 768. The higher should basically be 768. The higher should basically be 768. The higher should basically be 768 together. So you compare the two and pick the higher. So the next one we had what call mortgage repayment benefit. We have mortgage, we call it repayment benefit. So the mortgage repayment benefit is 640. 640. Mortgage repayment is 640. Together, team. Mortgage repayment is 640. Together. Mortgage repayment is basically 640. Perfect. Then we had withholding tax benefit. Withholding tax benefit. So the withholding tax benefit was 5% times 80. That was 4,000. That was 4,000. So we get employment income. So get for me the employment income. Get for me the employment income. Employment income. So get for me the employment income. So that should be 63. 63. Then you say less allowable deductions, less allowable deduction, less what you call allowable deduction. So we have mortgage interest. So we compare the actual. Actual was 180. What was the set limit? As of that time in 2023, the set limit was basically 300. The set limit was basically, so you pick the lower. So what is the lower? The lower is 180. So then we have what's called contribution. Contribution to pension. We have the next what's called contribution to pension. Contribution to pension. We have the actual amount. Amount is 180. Set limit, Ningapi. Set limit at that time was 240. At that time in 2023 was 240. And then we understand you compare with 30% of the gross employment income, which is 332. So what is 30% of that? 30% of 60, 30% of 63, 32,000. What is the 30% of that? 30% of that. Give me that, 30% of that. So this, you also pick the lower. So that is 1899,600. 1899,600. So you pick the lower. So the lower should be 180. So this was your lesson. So then we have what's called the net. We have it as the net employment income. What is the net employment income? So 6332 minus 180 minus 180. What do you have? What do we have? So provide me the figure. So that is 5972. We have it as 5972 00. Then add, say add other taxable income. So we don't have any other taxable income. So then we have what's called total taxable income. Total taxable income. So the total taxable income is basically 59,72,000. 59,72,000. Together, team. We respond with a yes if you're together. We respond with a yes if you're together. Kama tuko pamoja, tubonyeze yes. So then we proceed. We proceed to the wine that is Janet Musoka. Janet Musoka. We call it Janet Musoka. So Janet Musoka, we have the first taxable income. That is what's called the basic salary. So the basic salary is a figure of 160. We have 160 times 12. 160 times 12. So what is the basic salary? Taxable income for income, call it for 2023. So what is basic salary? We have it as 1920. So benefit in kind, we don't tax. Benefit in kind is exempted from tax because it's less than. So we go to, for this, we go to housing benefit. So housing benefit. So remember, this is an agricultural employee who lives in a plantation. So the housing benefit would be 10%. This is the total employment. We have the total employment income. With this, we have what's called the employment income. So we have that figure. So housing benefit, we say 10% of the employment income times 1920 times 1920. Then you less his own contribution. We're not given the market rate and anything. We less his own contribution towards rent. So say that it contributes how much? 5% of the basic salary. So 5% of the basic salary, which is again is 1920. So what is the housing benefit? Own contribution towards rent. So this is own contribution. We call it towards rent. Own contribution towards rent. What I call own contribution towards rent. We call it own contribution towards rent. Own contribution towards rent. So what is the housing benefit? Why do I use 10%, Douglas? Because this is an employee who resides within a plantation, plantation or a farm. So if you have employees residing within a plantation or a farm, we use what we call 10%. So that should be 96. We have that as 96. So this is total employment income. So add that for me. What is the total employment income? If you had that. Total employment income. What is the figure? Add that for me. For Janet Musoka, add that for me. Add that for me. So we have 20. We have 2016, 00. As I take the top of my pen, 20. Do we have allowable deduction in this question? Do we have allowable deductions in these questions? Do we have allowable deductions? We do not have allowable deductions altogether. Do we have allowable deduction? To allowable deductions in these questions? In this question, do we have allowable deduction in this question? Do we have allowable deduction in this question? We don't have it together. So then we say add we're going to call other taxable investment income. Investment income. Add what we call other taxable investment income. So we say that interest from infrastructure bond, that is basically tax exempt. We also say interest from Wemba Bank is qualifying, implying that the 15% withholding tax is final. So what do we have? We have what's called the farming income. So for the farming income, we basically have 240. And if you're told to own consumption, we have back on consumption. Especially, look up, team. I want us to smile here. Look up, team. If, for example, you're doing commercial farming, and then and then you're told that own consumption is not taxed. What is happening? That is going to be a area of loophole. Are we together? That is an area that is can be exhausted altogether. That's an area that can basically be exhausted. It can be a loophole for the taxman altogether. That can be an area of loophole area. So normally on consumption, we add it back together. So on consumption, we add it back. We have a figure of 270. Then you say on this, we now have what we call total taxable. We have what we call total taxable income. What is the total taxable income? Total taxable income. What is the total taxable income? Total taxable income. Add that to me. Total taxable income. Total taxable income. What is the total taxable income? So that should be 2286. We have it 2286. How many marks is that question? How many marks is that question? How many marks is that question? 11. So 1, 2, 3, 4, 5, 6, 7. So this for Musoka is 7. Then we have 1, 2, 3, and 4. So this is 4 marks. So once you have that, you have your 11. We have our 11 marks. We have our 11 marks on that together. So that is how we basically come up with that 11. So we proceed to the next thing. Is there anybody with a question? Is there anybody with a question? Kuna mtu ana swali. Is there anybody with a question? Is that question sorted perfectly well? Is that question perfectly done? Is that question perfectly done? Thanks. So I get to the second part. 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 That is a tax payable. I get to the second part, which is what we call the tax payable. I get to the second part, which we're told to determine the tax payable on income. Tax payable on income. So we have for John, we have John Musoka, what we call John Musoka, we get what we call the tax payable. Tax payable. That is for John Musoka. John Musoka, we have what we call the tax payable for John Musoka. Tax payable, that is for John Musoka. So look at the tax table. The tax table had changed at that time. So how much is the taxable income for John Musoka? Taxable income. Taxable income. Taxable income was 59.72. Is that okay? 59.72. Took us hour on that 59.72 as the taxable income. Give me a yes, tafadhali. Give me a yes. So, do we use annual or monthly? Do we use the annual or monthly? Do we use the annual or monthly? Annual. So on annual, we're basically told that the first 288, we tax at 10%. That gives us 28,800. So then we've been told that between 288 to 388, we tax at 25. So that is 100,000 times 25%. I have a figure of 25,000. 100,000 times 25. We have 25,000. 100,000 times 25%. We have 25,000. Then we are being told that between 6 million, between 388 to 6 million, we tax at 30%. So our total income does not exceed that. So we have 5972 minus 388. We multiply by 30%. Give me that figure. You multiply by 30%. Give me the figure. So that is 16,75,200. 16,75,200. So what is the gross tax? Give me the gross tax. Give me the gross tax. Provide me with the gross tax. Provide me with the gross tax. Provide me with the gross tax. Provide me the gross tax. So the gross tax is 1729, 1729, 00. Then you say less what to call the tax credits. Less what to call the tax credit. Less what to call the tax credit. So what is the tax credit that we have? We have pay. How much was pay? How much was pay for Musoka? How much was the pay? How much was the pay for Musoka? Pay for Musoka was 120 per month. So that should be 120 times 12. So what is that pay? Pay as you earn. 120 times 12, that was per month. That should be 1440. We less that, 1440. Then we less, the next we less, we basically less, we less personal relief. What is the figure for the personal relief? 28,800. Is there any tax credit? We don't have insurance relief. Do you have insurance relief? We don't. Do you have insurance relief? Do you have insurance relief? Do we have insurance relief? No. Do you have any withholding? No. So what is the net tax payable? At this point, we get the net, what we call the net tax payable. We get the net tax payable. The net tax payable. Give me the net tax payable. So we have it as to 60, to 60, to 100, to 60, to 100. So then I come to the other side. I have Janet Musoka. So taxable income for Janet Musoka. What is the taxable income for Janet Musoka? Taxable income for Janet Musoka. So give me the figure for the taxable income for Janet Musoka. We got is 2286. So then we say the first 288. The first 288 times 10%. We have that as 28,800. Then say between 288 to 388, that's 100 times 25%. That should be 25,000. That should be 25,000. Then we say that excess between 388 to 6 million, that should be 2286 minus 388 times the 30%. Times the 30%. What do you get? Times the 30%. Times the 30%, what do you have? So is it 569,400? So we have that as 569,400. Somebody to confirm. 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 Correct. So then we get the gross tax. I have the gross tax payable. So what is the gross tax payable? Get me the gross tax payable. The gross tax payable. And the gross tax payable. So that is 623, 623 to 100. 623 to 100. Then you less what you call less the tax credits. Which tax credit do we have in this particular question? Which tax credit do we have in this particular question? Which tax credit do we have in this particular question? Which tax credit do we have in this particular question? Tax credit that we have in this particular question. Tax credit that we have, personal relief. So we have what's called personal relief. So the personal relief is 28,800. Is there any tax credit in this particular question? Is there any tax credit apart from that? Is there any tax credit? We don't have. So the net tax payable, net tax payable. So what is the net tax payable? The net tax payable. Give me the net tax payable. Give me the net tax payable. The net tax payable. That is 594,400. How many marks is that question? How many marks? How many marks is that particular question? 4. So look up. 1, 2, 3, 4, 5. So any 4 times a half, that gives you 2 marks. If you get 3, that should still be okay. So for this again, what are the marking points? This, and this. So 4 times a half, that should give you 2. But if a student gets 3, still will be rounded off. You cannot give a student 1.5. You round it to 2. If you get 3 entries, you have the 2 marks. You get the 3 entries or any 4, but if you get the 3 entries on any, you have the 2 marks. Is that question done well? What am I trying to say? If you lose time, kama una time, do you think there's marks in this? And there's marks in this. Have you seen me allocating anything there? But if you miss to do these things, then there's an issue. I have an issue with the student doing this, missing to put these entries. But a student, if you miss this and get any and put anything there, you still have your marks as long as the entries are checked, are okay. Are we together? And that is why I keep on insisting that particularly for calculations, my students should perform very well. So we get to the next question. Can I wrap this question? Can I wrap? Can I wrap this question? Yes, I can wrap. So we get to the next question. That is on disability. I want to pick a question on disability. On disability. Something on disability, 2017. That should be around 2017. A question that tests the concept of disability. A question that tests on disability. A question that basically tests on what I call disability. A question that basically tests on disability. So I want us to check around 2017. Around 2017. It's a good question. Then 16 to 17. A question on disability. Let me pick it. Either 2017 or 2016. I wanted to test on that concept. Some minute, my paper seems to be disrupted. Yes, November 2017. Send it to me. My paper seems to be disarranged. That's what I was looking for. Can you send that question to the group so that I can have it November 2017? My papers are a bit disarranged. Yes, now I find it. I've found at least where it is. So together on that, I want us to read it before we get to a break. Do we need a break before? I have it already. I've gotten it. My papers were a bit disarranged. Can we have our break? Then we come back. I think we can have our break as somebody sends that. Is that okay? We can have our break as somebody sends the paper. Together. A break of 5 minutes. Thanks. 5 minutes. So are we there? If you're there, we respond with a yes. If we are there, we give it a yes. If we are there, you give it a yes. So we're going to look. Nelly Zura is employed by Chakaranda Limited. Nelly Zura is employed by Chakaranda Limited as a procurement manager. She provided the following details relating to income for the year ended 31st December 2016. So being told that the basic salary was 165 net of pay. When an examiner tells you basic salary, number one, basic salary is taxable. So net of pay, you get back the gross. Net of pay, you get back what you call the gross. So the gross is the figure that you have plus pay. payee. So the gross figure will be, in this case, the gross figure will be 165. You had back 35. So what is the figure for the gross? What is the figure for the gross? What is the figure for the gross? So the figure for the gross, that is 200,000. So that is that. So basically, that is what you're going to subject to tax. She's registered a member of National Councils of Persons with Disability, and has issued with and has been issued with a certificate of exemption by the Commissioner of Domestic Tax. So if it's issued by the certificate of exemption by the Commission of Domestic Tax, we understand that per month, how much is subjected to tax? Only 50. That's 200 minus that. Only 50 is subjected to tax. Subjected to tax. Why? Because the first 150,000 is basically exempted from tax. The first 150,000 is basically exempted from tax. The first 150,000 is exempted from tax. You give me a yes if you're together. And the first 150,000 is basically exempted from tax. So then we're being told that the next employer pays a house allowance of 40 per month. She utilized this amount. She utilized the amount to rent a house from Jibril Property Agency for 30,000. She uses the amount to rent Jibril Property Agency for 30,000. So what is the housing benefit? The housing benefit. Housing benefit. No, that is paid in cash. So what is the housing benefit? Housing benefit. Housing benefit should be, in this case, which is taxable, that should be 40 times what? Times 12. So what is the housing benefit that is taxable? That's 4. 40 times 12. 40 times 12, that should give us 480. So the examiner confuses and tell you she uses 30 to rent. What is she being paid? She's being paid 40, not the 30. So the housing benefit should be 40 times 12, which is 480, and that is a taxable benefit. So then we're being told that Nelly Zura has entered into agreement with Nyumbani Medical Center for personalized home care, which she pays 18,000 per month. Under the agreement with Nyumbani Medical Center, sends a therapist twice each week to her home. She provided documentary evidence to the commissioner's satisfaction. How are we going to do home and personal care for people with disability? 18,000 per month. How are we going to treat it? We say that personal care for disability, home and personal care for people with disability, that is allowable deduction. Are we together? That is going to be treated as allowable deduction. We respond with a yes. That is going to be treated as allowable deduction. So then we've been told that Chakaranda pays Chakaranda Limited pays 28,000 per month, pays 28,000 per month to better insurance for Nelly's medical policy. Chakaranda pays 28,000 per month to Better Insurance Limited for Nelly's medical policy. How do you treat that for Nelly's medical policy? How would you treat that? Pays 28,000 per month for Nelly's policy. How would you treat that? Pays 28,000 per month. So that's a benefit. That's a taxable benefit. Are we together? However, That's a taxable benefit. So the next, we're being told that she is provided with 2,800cc saloon car, leased. Look at the word leased from Dicop Tours, a car hire firm. A car hire firm in Chapua, inclusive package. The employer pays 35,000 per month lease to Dicop. Dicop travel. The card cost Dicop Tours and Travels 2 million in the year 2015. So if the car is leased to hired, what do? Say we say that if the car is leased to what they call hired, use what? Use the lease value. Lease to what they call the hiring value. So if the car is basically leased to hired, we ignore other things. And we use what? We use what's called the lease to what we call the hiring value. We use the lease to what we call the hiring value together. We ignore other things and we use what's called the lease to what we call the hiring value together. We use what's called the lease to what we call the hiring value. Perfect. So during the year, she was sent on official duty outside her usual work for 10 days, where she was paid subsistence allowance, of 24,000, where she was paid subsistence allowance of 24,000 per day. She proved to the commissioner that 3,000 per day out of subsistence was received was reimbursement for expense. 3,000 was reimbursement. So what is per diem? Per diem is taxable, excess of 2,000 per diem. However, on this per diem, look up team, is 3,000 part of per diem? Is the 3,000 that is paid for reimbursement of expenses? No. So you will less it. Once you less it, then you less 2,000. We say we tax excess of 2,000. So how much is tax per day? At that time, per diem was 2,000. So how much is per diem per day when you less that? Per diem per day. How many days were they? For 10 days. So for 10 days, when you less that should be? Then you have 10. So the figure should be 1. So this is what is going to be taxed. At that time, we know that the changes that were made to the recent finance bill moves to 10,000. So this is the together team. That reimbursement, we don't tax. We don't. Perfect. So then we move to the next. We are being told that Chakaranda paid to 6,000. Chakaranda paid to 6,000 on behalf of Nelly, being an entrance fee to supplies management, that is ICM during the year. Entrance to ISM, supply chain management. How do you treat that? How do you treat that? Remember, who is Nelly? Procurement. So that payment relates to the work. That payment basically relates to the work. Do we tax it? That is non-taxable. To ICM, that relates to the work of Nelly. So do we tax it either? We don't. Are we together? The payment of 26 that is made on behalf of Nelly, it is not being taxed. Why? Because the payment is basically to a body that is related to the work of Nelly Zura. Are we together? Related to the work of Nelly Zura. For example, you are accountants. If the employer pays for you towards ISPAC, that is non-taxable. When you pay for yourself and you're not reimbursed, we treat it as allowable deduction. When you pay for yourself and it's not reimbursed, we treat it as allowable deduction. So then we proceed to the next. We're being told that she was provided She was provided with airtime of 5,000 per month for private use. How do you tax airtime? That is telephone stock airtime, 30% of the bet, 30% of the benefit. We call it 30% of the benefit. And then you're being told that Nelly Zura's other income, Nelly Zura's other income. Number one, dividends from Bazuri Limited net. Do you tax that? Dividends from Bazuri, dividends from limited company, that's a qualifying dividends. The 5% withholding tax is fine, is final. We don't tax that. So then the next examiner tells us that dividends from Zuhuri Cooperative Society, from Zuhuri Cooperative Society. Wait, from Zuhuri Cooperative, no, is not final. We're still subject to further taxation. Dividends from cooperative societies other than SACCOs, those are non-qualifying. The 15% withholding tax is not final. We're still subject to further taxation, not final. So we still subject that to further taxation together, Eva. We are still going to subject that to further taxation. Perfect. Then you're being told Transpalace Company, Zanzibar. Dividends from outside the country. What did you say about dividends from outside the country? Dividends from abroad. Those ones are exempted from tax. We don't charge tax. When you receive dividends from outside the country, those are exempted from tax. Those are exempted from tax. So we move to the interest. Interest we have from housing finance, from housing finance company, housing bonds. How do you treat it? So we say housing finance. For housing finance, we have it in the notes, housing finance. We say that the first 300,000, we say exempted from tax, exempted from tax together. So for the housing finance, the first 300,000 is exempted from tax. So if you have for 20, a figure of for 20, we are going to less 300,000. So therefore, we know that 120 is what you're going to subject to tax. Subject to tax. Subject to tax. 120 is what we're going to subject to tax. 120 is what you're going to subject to tax. Tuko pamoja. You give me a yes if you're together. You give me a yes if you're together. So then we're being told treasury bills net. For those who are investing in treasury bills, how do you go about it? That's qualifying altogether. Treasury bill, the withholding tax is final together. Are we together? Yes, withholding tax is final. Then you say it will become bank fixed deposit. If an individual receives interest from a bank, how do you treat it? The 15% withholding tax is final. We are saying, I'm not saying limited company. I'm saying that if an individual, in this case, Nelly Zura, received interest from a bank, the 15% withholding tax is final. So therefore, we don't subject that to further taxation. Then you have capital gain, sale of private customized Land Rover. Capital gain, is that a tax? Do you subject to tax? No. Are we together? Capital gain, we don't subject to taxation. So I want us to put that question down. Taxable income for Nelly Zura for the year ended the 1st December 2016. Together. Can we do it? Is there a question from the team? Kuna swali? Kuna swali? Kuna swali? Is there any question? Is there any question? Is there any question? So Nelly Zura, we call it Nelly. Nelly Zura. Zura. We have it as taxable income. We call it for 2016. So we have the basic salary. I picked it for this concept. So this is a person with disability. So we add 200, and we understand that the first 150 per month is exempted for people with disability. Then you multiply by 12. So what is the basic salary that's subject to tax the whole year? This is why I tested that concept, so that we remind ourselves of that. How much? How much is that? 600. 600. Then you have the housing benefit. That's allowable deduction. Then you have insurance. So what is the insurance benefit? Insurance benefit. So that's, is it 336,000? 336,000. So then we have what you call, the next is motor vehicle benefit. We use what you call the lease value. That should be 35 times 12. So get from that 35. That was 35. We use the lease value. If the motor vehicle is higher, use the lease value. What is the lease value? That should be 420. 20 for 20. Next is the per diem. Per diem, that should be 24 minus 3,000. That was minus 2,000. Then we multiply this by 10. 10. What is the figure? What is the figure? That was 190. Somebody asked a very nice question. Why are we bringing the housing benefit? In this case now, we are bringing the housing benefit before. Was it paid in cash? So that was paid. Was it paid in cash? Somebody asked a question. Please, let's attend to one of us. Somebody asked a question. It was paid by the employer, but paid in cash. It was basically paid in cash. Is that true? It was paid in cash. Are we together? It was paid in cash. Eva, it was paid in cash. Together, Eva, we responded yes. Yes, it was Douglas. So then this is 190. We have it 190. In most questions, look up, Tim. Douglas, look up. In most questions, because it is not paid in cash altogether. So therefore, it becomes the last items. Are we together? It was not, if it's not paid in cash, then we get the housing benefit using the formula. I hope, Eva, we are now together. So housing benefit, we have that. Then for the supply, no. So we have airtime or airtime. We call it airtime, which is telephone benefit. Telephone benefit. So the telephone benefit, that should be 30%. So we have 5,000 per month. That should be times 60. So 5,000 per month, that is times 60. What do we have? Times 30% of 60. 30% times 60. So that's 18. 18. 18 Is there any taxable benefit? Any taxable benefit? Do I have any taxable benefit? Do we have any taxable benefit in this? We don't. So employment income, we get what we call the employment. Give me that. Employment income. Together. Are we together? If we're together, we respond to this. The less allowable personal home care, personal home care, we say for people with disability, for people with what you call with disability. Personal care for people with disability, personal and home care for people with disability, with disabilities, personal and home care for people with disability. How much was it? It's 18,000. 18,000. How much will be paid times 12? It's normally set capped at what? Capped at what? This normally capped at what? Or restricted at what? Restricted at what? 18 times. That was per month for the whole year. Yes, at 50 per month. So restricted at 50 per month. How much was 18,000 times times 12? Give me 18,000 times 12, kindly. And remember, it's restricted at 50,000 per month. Per month. So meaning that the set limit for this should be for a whole year should be 600. So get for me that. That is 216. So the law is 216. Galma, why do you think we have restriction to this? Why do you think we have restriction to this? Because people can take advantage. Is it true? So that people don't take advantage. Is there any other allowable deduction? Yes. Any other allowable deductions? That's 216. Do you have any? So this is net employment income. Employment. So we have the net employment income. So give me the net employment income. Is there any other allowable deduction? Is there anything that I've forgotten? My good students are saying I have not forgotten anything. So get for me that. Net taxable, net employment income. You're the guys I'm waiting for. So that is 1828. Then say add. Say other taxable income. Add what you call other taxable income. Add. So on that list, add other taxable income. We call it dividends from Zuhuri. Dividends, Zuhuri. We have it cooperative society. Zuhuri Cooperative Society. Dividends, we normally had it at gross. If it's net, you had it at gross. So get it at gross. The gross should be 100 over 85 times 17,000. So that's 20. 20. Then we say housing finance company bond. Housing finance. That should be for 20. Do you have this in our notes? Minus 300,000. So we have total taxable. So get for me the total taxable income. Get for me the total taxable income. Get for me the total taxable income. So how many marks was that question? How many marks was that question? How many? 10, 12. 1, 2, 3, 4, 5, 6, 7, 7, 8, 9, 9. That means this one would 9, 10, 11 on this. 11. We can have 12 for those calculation, and maybe 13, and maybe that. So any 12, the sum. For those that involve technicality, like this is not a concept that would give us because this is common, but this because of this aspect. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So any, we say any 12 times, any 12 times, we call it any 12 times 1. Any 12 times 1. Together. Any 12 times 1. Nani hajaelewa? Who has not gotten me? Nani hajanipata? Is everybody together with me? Yes, hapo, acha turudie hapo. Douglas. Is it Douglas? Yes. Douglas, we say that the investment incomes that are subjected to further taxation. So if you look at this list, when you receive dividends from a limited company, we call it qualifying dividends. So basically implying that the 5% withholding tax is final. Are we together? We don't subject it further taxation. Give me a yes if you're there, Douglas. Give me a yes if you're there. Give me a yes. So the second, when you say dividends of cooperative society, if you look at the notes on investment income, when an individual or a company receives dividends from cooperative societies other than SACCOs, the 15% withholding tax is not final. The 15% withholding tax is not final. We're still subjected to further taxation. But when you're subjected to further taxation, Douglas, we subject it at gross. The figure that we had here, 17, that was net. So net meaning that 85%. The gross should be 100%. So 100% of 85 and 17, we get the gross figure. Because when you subject it to further taxation, we subject it at gross. Sawa sawa. You gave me a yes, Douglas. So then the next we talked about transpalis. When you receive a dividends from outside the country, Zanzibar is not Kenya. So when you're receiving dividends from outside the country, we say that that is exempted from tax. So we don't subject it to tax. Then we have housing finance company bond. So housing finance, if you look at the notes, the first 300,000 is exempted from tax together. The first 300,000. That's why we less. The first 300,000 is exempted from tax. So we respond with a yes. Douglas. We respond with a yes. So then the next we had treasury bills. For those who invest in treasury bills, I know there are people who invest in treasury bills. Are you subjected to further taxation? Have you ever subjected that income? Withholding tax is fine. It's final together. Once the withholding tax is subjected, then that is final for those who have invested. Then you say, when an individual receives interest from a bank, not a company, I've said individual, the 15% withholding tax is final. So that again is a qualifying, we call it a qualifying interest. We don't subject it to further taxation. Then when we talk about capital gain, no. Capital gain, we do not subject to further taxation. So that's why we have the two. So we had other incomes that are subjected to taxation. Together, Douglas. Together. You gave me a yes if you're together. Thank you. So I think we can stop there for today. Assignment, munifanyie tax payable. Munifanyie tax payable. Assignment, munifanyie tax payable. Na hiyo part ya pili. Tax liability. Together. Munifanyie tax liability and that as assignment. So I want to say God bless you and God bless our class. God bless our class. Unless somebody has something that is burning. Is there anybody who has something that is burning that needs to be asked? If you have questions, you can share. If you have any worries, you share with Mwalimu. If that is done, we respond with a yes. So we close it there, and I wish you well. God bless everybody, and God bless our class. Tomorrow we have our DIT revision. The bunch of questions that I need us to revise. So from tomorrow, we should work on finishing those questions. Dangot, not Awiko, but Jaffa. We need to work on those revision. The papers that I have that I've made, Jaffa, the papers that I've made, make sure that we have them before class so that you can go through those papers. I need us to revise those papers, all of them. So make sure that Jaffa will liaise so that we have those papers for revision. Yes. There being no any other business, we can close there. And continue supporting Focus. We still have our blocks, kindly. We still have our blocks. We still have our blocks, kindly. But then also catering for your students, for your brothers and sisters in high school. We also will be having our programs for high school. Kindly remember us on that. We are soon launching our programs for high school programs. Kindly remember us on that if you have brothers and sisters. Kindly also remember us on that. We are also launching that. The high school program, we are launching that. Kindly remember us on that. Yes. Thank you. But again, blocks are still ongoing. So don't forget about us. But also the high school program that we are launching, kindly also, if you have your brothers, instead of them sitting at home, allow them to learn online. We'll close it there. Yes, for revision. For revision. Holiday tuitions. Yes. Alan, holiday tuitions.